The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Mike, and Tucker with you here. It's a Friday on the Financial Exchange. It's actually Friday everywhere on planet Earth at this very moment in time, I believe. I don't think it's Saturday anywhere yet.
Yeah, I don't know.
We're getting close to Saturday, but we're not there yet. In any case, our top story is not, in fact, what day of the week it is, but rather we continue to talk a little bit about what we are seeing in the bond market as it relates to the U.S. Treasury's plan to increase buybacks of U.S. long-term debt and how different parts of the market are responding to that in recent days. So as I sit here right now, Michael, and you know it's serious when I go full Michael on you.
About the Michael, yeah.
U.S. 10-year Treasury is at 4.71%. Just prior to the Treasury making that buyback announcement, U.S. 10-year Treasury was at 4.7%. So effectively, there's been no change. We've round-tripped the entire thing at this point. And it raises the question, doesn't beg the question, but it raises it. What does the U.S. Treasury Secretary, Scott Bessent, actually want out of this? If it is materially lower long-term interest rates, then the market is effectively saying, you called? Fine. I raise. Back in your court. What are you going to do?
Yep.
That's pretty much where we are. If Bessent doesn't want lower long-term Treasury rates, and this is just a mechanical thing just to, keep the plumbing, going, then, look, quite honestly, it raises the question of, why now then? What do you know that we don't? But I think ultimately the real meat of this, in my opinion, is the juxtaposition between what we're hearing from the Treasury and what we're hearing from the Fed, two different institutions that answer to different people on different timelines about different things, but we're clearly not seeing them singing from the same sheet of music. And this is why I think this is so problematic, is Kevin Warsh, first 3 months on the job, has said, look, I'm not going to spoon-feed you. His words, not mine. Tired of markets being spoon-fed. I'm not just going to spoon-feed you what we're going to do. Markets are going to have to interpret data, and then markets can do the work for us so that we don't have to do as much.
Yep, that's what he said.
Scott Bessent, who has a different set of guidelines. Remember, Kevin Warsh's job is to maintain price stability and full employment. Treasury Secretary, you have one job. Pay the bills. That's what you do. You pay the bills. You finance the government, and you make sure everyone gets paid. That's it. Plain and simple. Treasury Secretary's not trying to make money for the U.S. taxpayer. Treasury Secretary's not trying to, find the next hot stock. Treasury Secretary is to your job is to pay the bills and make sure the financial system keeps working. And so Bessent, through this action this week, is pretty much saying, guys, something's not working for me when it comes to paying the bills. Is that a bad interpretation, Mike, or is that accurate.
No, that seems to be accurate. Where it's coming from, whether it's actually plumbing issues or just a general distaste from the White House for mortgage rates that are this high and other borrowing costs that are this high, I think remains an open question. But my interpretation is he tried to talk down interest rates, and to your point, markets came back and said, yeah, talk isn't going to be enough. Talk is cheap. We're going to need to see more. And so, like you said, markets kind of raised the stakes here, and we will have to see whether Bessent and the Treasury are willing to really put serious dollars behind this goal of bringing down those longer-term rates.
Now, if this were a plumbing issue, we'd be seeing it somewhere in terms of, look, on a regular basis, the U.S. Treasury issues new bonds. It's how we borrow money. And when you start to see, big tails on those auctions, the way they do it, it's a reverse auction where basically you end up you bid on the new treasuries that are issued, and pretty much what ends up happening is the lowest rate ends up, taking this thing. And so when you look at this, signs of failed treasury auctions, not U.S. treasuries, but just in general, signs of bad treasury auctions. Hey, there's not that much bid to cover. You don't have normally you want depending on the issue a 2-to-1 or 3-to-1 bid to cover, so you're getting way more bids than what you have. Occasionally, maybe you get that dipping. Maybe you get a tail on it where it's hey, we really had to reach in order to fill the entire thing because the yields that we were getting were higher than we anticipated. We're not seeing signs of those. We're seeing a half basis point tail on some of the recent bond issues. That it's nothing.
Right.
So it's not a plumbing issue. I'll call it it's not a plumbing issue because you're not seeing it there. And so the problem then is if you're a bond investor, and remember, there are different reasons why people can buy bonds. Lots of them. You could be a life insurance company. You just need to buy 30-year treasuries because you got a bunch of people you think are going to die 30 years from now, and that's what you're buying. Cool. You could be an investor buying a 10-year treasury just to provide ballast in your portfolio. That's cool, too. You could be a total return-focused bond investor saying, hey, I think the 10 year's undervalued right now. I'm going to buy it and then flip it in a month when if it rallies. They're all different reasons why investors can buy bonds.
Sure.
The problem that you run into now is if you are a bond investor, part of the reason, the way that bonds are priced is basically by knowing the risks that are out there and being able to say, okay, here are the risks that I see, and this is the interest that I demand in order to hold that risk. You're basically warehousing that risk. Well, how do I know what the rules of the road are? Who do I listen to? Do I listen to Scott Bessent or do I listen to Kevin Warsh? Because they're telling me very different things, and that affects how I look at this. And so if I don't know who to believe, well, in the absence of, any, new information about, how the Treasury operates or how the Fed does, I kind of got to listen to Kevin Warsh. Because Warsh has the bazooka, whereas Scott Bessent does not. What I mean by that is the Fed can print money. Treasury can't. Treasury can borrow money, but the Fed can print money. And you take the money printer over the money borrower any day. And that's, I think, what markets are doing right now is they're saying, look, Scott, you're telling us that, you want lower rates? The guy with the real bazooka is saying, I don't care what rates are. I'm going to believe him. Is that a bad interpretation?
No, look, I think Warsh really laid this out. He does not want to be... He does not want investors listening to him as the referee, right? That was not his goal. He made it very clear that he wants markets trying to figure out, where things are going on their own without looking to him and the Federal Reserve as the referee. In the absence of that, Bessent has now stepped into that referee role. I don't know if anybody's going to listen to him, but he has made the decision to step into that referee role, and I don't know what Warsh is supposed to do about that now.
I'll make one point just that I think is interesting. Kevin Warsh isn't actually the referee. Kevin Warsh is the ball. I mean, you think about it, the way that bonds get priced is based on, okay, here's what we think the central bank is going to do because ultimately they can print money. Like, full stop. It's, okay, we're going to price this way because if X happens, the Fed or the Bank of Japan or the Bank of England or whoever it might be is going to have to move interest rates this way in order to get things to happen. Kevin Warsh is the ball. Like you are playing what the Fed is going to do. Even if the Fed's not going to tell you what they're going to do, you're still playing that because they still are either they're going to do one of three things. They're going to raise, they're going to cut, or they're going to do nothing. So you're still like Kevin Warsh is the ball regardless of whether he tells you he's the ball. Scott Bessent, you can make a case, is the referee. He does not have the authority to do that. Treasury can borrow. They can't print money. They can't change interest rates at the drop of a hat. So I think this is going to be really interesting to see how the next 1 to 2 months play out. Lot of different cross currents that could take this in a lot of different directions. It is, again, after just what's been a slow, doldrumy summer where not much interesting has happened in markets, in my opinion. Let's be honest, Mike. We've been talking about AI 45 minutes a show for the summer.
Yep.
I'm just sick of it. It's not it's no one's fault. It's just there hasn't been anything interesting to talk about.
Yeah, we got some unanticipated excitement today.
Oh my goodness! I'm so happy we have something else to talk about, even if it's not necessarily ideal. Hey, the next month or two is going to be really interesting because of this now.
Yeah.
Let's take a quick break. When we return, we've got Jackson Hole, the symposium for the Fed, coming up next week. We'll discuss what to expect after this.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The worst time to make a housing decision is when you don't have a choice. This is Chuck Zodda from the Armstrong Advisory Group. Too often, people don't think about their next home until a health issue or the upkeep of a house makes the decision for them. If you start planning now, you can take your time, explore your options, and make decisions that fit your retirement goals instead of reacting to a crisis. In our new guide called Navigating Retirement Housing Choices, you'll learn about downsizing, 55-plus communities, continuing care retirement communities, assisted living, and the important questions to ask before making one of retirement's biggest decisions. Don't wait until circumstances dictate what you need to do. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local Heart Walk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and this year's 5K is officially sold out. The race will take place on Saturday, November 7th at Fort Independence on Castle Island, and we hope you can take this opportunity to consider making a donation. Your gifts help provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Mike, next week the Federal Reserve heads to Jackson Hole for their annual symposium there. Do we have any idea what's on the menu this year?
From what I've seen, no. And, this is an interesting event where Warsh is going to speak, but he can really talk about darn near whatever he wants.
Did they get rid of the bats? You remember last year one of the cabins had bats in it? We covered it.
I think I was out that day, Chuck.
You missed the Jackson Hole bats?
I guess I did, yeah.
Tucker, you remember that?
Vaguely, yeah. 2025, I'm seeing it now. A colony of bats was discovered at a lodge.
Yeah.
I hope not.
You hope that they haven't gotten rid of them?
Correct, yeah. That's my...
Because you hope that someone on the Fed contracts rabies?
No, I don't want anybody getting rabies. Not every bat's got rabies. But, yeah, it would be a fun story to cover again. So we've got this Jackson Hole Symposium where we've got the opportunity to hear from Kevin Warsh again after hearing from him end of July, was it?
Yes, July 20-something.
And I know we just spent the first entire segment talking about the bond market and Bessent and all this stuff. But I have to reiterate why this is so important and why every financial media outlet is covering it so heavily. You personally might not care that much about the bond market. You might not own any bonds at all, although I would bet you do, based on the average 401k and ways that those act. But the point that I will make is the entire global financial system is pretty darn reliant on the U.S. government securities functioning, paying their interest, and running fairly smoothly, whether it is borrowing rates for large corporations, savings rates that you get from the bank, or even the funding mechanism for publicly traded stocks. Like, all of this kind of revolves around the U.S. government bond market. And so that's why we're so fascinated in this is you've got a very big departure from what was status quo activity at the Federal Reserve for the last decade.
Sure.
So that's been fascinating. And then at the same time, you have this action from Scott Bessent, which is not anything terribly new, right? Plenty of Treasury secretaries have done exactly a version of what Bessent is doing right now. But they've done so in the context of a Fed chair that was doing, like I said, something completely different from Warsh. And that's what makes this interesting is on the surface, you've set up a conflict between this Treasury secretary and this Federal Reserve chair who, both seems like they are pretty close with the president and see eye to eye with a lot of his views on things. And so, yeah, pretty fascinating stuff.
So the question's going to be, what are we actually going to get from Warsh on next Friday? And again, there are basically two ways that this can go. Like it's kind of a binary outcome. Either Warsh is going to provide sufficient clarity, not on like what he's going to do, but just on his overall view of like the Federal Reserve and the role that it is going to play in conjunction with the Treasury, or he's not. And there are two very different outcomes for markets depending on that. If we get a repeat of the July 29th performance, then this move in yields is not over. Because
the July 29th performance left pretty much every financial expert in complete confusion about how Warsh thinks about the policy that he's laying out.
Yes, to put this clear, the day before, okay, like if you want to know like how things moved immediately after, the day before that Fed meeting, the 10-year Treasury was at 4.588. 2 days after, it was at 4.75. So, like, okay, like clear move around that. If you want to look at gold, just as an example, because gold's been getting a lot of chatter as well, recently. Gold the day before closed at 4,028. A week later, on August 5th, it was up to 42.47. So, like, that kind of kicked things off, on that move as well. So, it's pretty clear that what we've seen over the course of August in rates and in precious metals and basically anything that is sensitive to the idea of, hey, how much trust is there in the U.S. Treasury market has been kind of getting hit, over the course of the month. Mm-hmm. Not disastrous type stuff, but certainly stuff that should wake up a policymaker to say, okay, like, I need to do something before this becomes a disaster. And by the way, we talked about this. Every Fed chair gets tested at some point.
Yep.
And, immediately after the first Fed meeting that Warsh presided over, where a lot of people, myself included, we were pretty complimentary. It was like, okay, like, this is good, but it's just one meeting, and we need to see more. We were saying that at the time. It's like, look, you can go and pull the tape from like the day after the Fed meeting or the week after that first Fed meeting in, I think it was late May or early June. I can't remember offhand. But we were sitting there and we said, hey, this is good, but he hasn't done anything yet. Mm. Like he hasn't had to respond to anything yet. Jay Powell, back when he came on board in late 2018, he famously made the comment, hey, our program to wind down and to reduce the size of our balance sheet is on autopilot. And the market pressed him and he said, you know what? Not on autopilot anymore. And it might not have been what Jay wanted to do, but ultimately the market was telling him, Jay, you can't do this. This is not going to work. And so now you've got a market that when you look at the signals that Fed chairs look at, yields, metals, like anything that's telling you, hey, is there a policy error that's happening? Right now, they're quite honestly, like, they're kind of screaming, hey, you're about to do something you shouldn't. Mm. And now we have to see, like, how they handle it. Is it just, the question is it the pizza that's the problem or is it the box? Like, is what you're trying to do the issue, or did you just phrase it and package it wrong and you just need to reset? We'll see. Let's take a quick break. When we return, we've got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Navigating Retirement Housing Choices. Mike, as you get towards retirement, what are some of the considerations for whether you should stay in the property that you've been in for a while or consider moving to a new one?
To me, for most people, they come down to 2 factors. One would be financial, and 2 would be quality of life. And so, first things first, right? I mean, you're heading to retirement. Did you do enough saving to be able to afford to live in the same place you did, with or without that mortgage, with where property taxes and insurance costs have been going? So that's probably number one. But the one that people kind of start to forget about is the quality of life. And so how close am I to family? How close am I to health care? And am I going to be safe in this house 20 years from now from a healthcare perspective?
It seems like for most people, they're going to have different priorities as far as which of those come first. So it very much is not, here's what you do, but more, here are the things you need to consider and then get to your own conclusion.
Yeah, but I think it's important that people think long-term on this, right? You do not want to make this decision twice. And so very often we do see that happen. Hey, I'm moving here because of taxes, and I didn't think about the other qualitative lifestyle pieces about that move.
Folks, our guide is titled Navigating Retirement Housing Choices. There are 2 ways to request it. First, you can call 800-393-4001. Second, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are wrapping up a chaotic week in positive territory as Wall Street continues to assess the bond buyback made by the Treasury this week. Traders also waiting for the Jackson Hole Symposium and NVIDIA earnings due out next week. Right now, the Dow up 0.2% or 357 points higher. S&P 500 up about 0.3% or 23 points higher. NASDAQ is up about 0.1% or 30 points higher. Russell 2000 is up over 0.3%. 10-year Treasury yield is up 3 basis points at 4.73%, and oil retreating 0.5%, trading right around $86 a barrel. Bitcoin heading for its best week in more than 3 years and now trading at $77,000. Crypto-related stocks including Strategy, Coinbase, and Robinhood are seeing gains in reaction to the recent leap in Bitcoin. Meanwhile, shares in Ross Stores climbing over 2% after the off-price retailer hiked its full-year outlook on higher demand from new and existing customers. Sticking with retail, where shares in BJ's Wholesale are up by 4% after the company posted better-than-expected second-quarter results, where its revenue jumped 16% as budget-conscious shoppers were in search of value. BJ's also increased its full-year adjusted earnings forecast, and according to Bloomberg, Broadcom is in talks with lenders to raise more than $60 billion in debt from an AI chip financing deal that will benefit Anthropic and other companies. Broadcom is up over 1% right now. I'm Tucker Silva, and that is Wall Street Watch.
Mike, we got a piece from Barron's here. 6 big takeaways from retail's big week of earnings. I have one thing just before we go further on it. The first sentence. Walmart set a somber tone for the first week of retailer earnings. Somber? Like, no one died at Walmart's earnings. I'm just not sure that's the right word.
They weren't even that bad of earnings. Somber is not the right word, yeah. But in any case, let's talk about the takeaways here. One is a takeaway that I think anybody close to the real estate space already knew. People aren't buying and selling homes, therefore people aren't going to Home Depot and Lowe's quite as much as they normally would.
Sure.
Like, pretty basic one, but, for anybody that was expecting a blowout quarter from Home Depot and Lowe's, it's not going to happen until home purchase and sale volume ticks up in some meaningful way, which I don't expect to happen without a meaningful drop in interest rates, which is the whole thing that we're talking about for the first half hour of this show. So,
which, by the way, they're continuing to go up as we've gone through the show. 10 years gone up 2 basis points since we started.
Yeah. So, continued doubt about the Treasury's ability and willingness to go and do that. But yeah, until it happens, you can talk about, a continuing, slight increase in elevated purchases and sales of single-family residences, just as more people get used to these higher interest rates. But the idea of substantially higher just doesn't happen until rates move down. On the other side of the consumer space, Walmart, Target, TJX all reported earnings this week. And my general takeaway is that while the consumer is okay, they're a little bit stressed, and Walmart called this out specifically, that $4 a gallon seems to be some sort of psychological or real dollar-wise breaking point for a lot of their customers, and so they are trading down, pulling back, and not going for as many high-end discretionary items as they might usually do.
Yeah, and look, I don't like to overreact to like any one particular quarter of earnings from even like from like a few companies here.
Sure.
Just because some of this could be, okay, like people spent a bunch of money on the like World Cup and so they didn't spend money at Walmart. Or again, that's probably a dumb one, but
sure. I get it.
Yeah, there's other stuff that goes on, and here's the thing, that when we look at the overall credit card spending data, if you're looking at what Visa's telling you, if you're looking at what MasterCard's telling you, if you're looking at what the banks are telling you, if you look at what we're seeing just from transaction reporting companies and things like that, none of them are signaling any overall problem with consumer spending.
Right.
So it might have just been that for this quarter, maybe it was a shift from retail to services. Like that's very possible in terms of what we're seeing. I get that this week's retail earnings weren't great, and in particular the Walmart one's kind of like, ooh, like why is Walmart down 10%? But I'm just not sitting here like being like, hey, this is a huge problem right now.
Yeah, it does not seem like a big problem. If it were a big problem, you'd see same-store sales declining. That's not what happened, right? Like same-store sales were pretty flat for most of these guys. They are not warning investors about their future earnings coming down further. They're just saying, look, people are adjusting to these higher gas prices, and maybe it's going to mean tougher earnings for us in the future, but we don't think so. And so it was a rough-ish quarter, but the sky isn't falling.
If you do want the piece to potentially be worried about, it's the fact that the savings rate has continued to dwindle, and maybe that's why the spending growth has been as consistent as it's been overall, and that can only continue for so long. So if you want something to potentially be concerned about, that could be it. The counter to it is that the savings rate tends to be retroactively revised up in a lot of cases. And so I'm not sure it's worth making any noise about, just because a lot of times, we have the conversation like, the savings rate looks like it's going down. And then when they, go and have additional data a year from now, they're like, well, it didn't actually decline as much as we thought it did.
I'll also make the point, and not to sound insensitive to the average American consumer, not sure this story matters one bit right now to markets. Generally speaking, we're often focused on the consumer and, hey, how's the consumer doing? We're a consumer-driven economy. Right now, we are not a consumer-driven economy. We're an AI and infrastructure-driven economy, and that won't last forever, in my opinion. But right now, how great the consumer is doing matters to retailers, matters to those consumers, might not matter to the stock market.
Yeah, I think that's a fair point as well. You probably don't want that to continue in perpetuity. But, again, the stuff that's been driving the market for the last 3-4 years has been AI. It hasn't been housing. It hasn't been the consumer. It's been AI. Let's take a quick break here. When we return, talk a little bit about what we're seeing in terms of healthcare costs and also ghost jobs. Are they, is it a spooky thing for Halloween, or is it something bad? We'll discuss next.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
You've been saying one more year for the past 5 years, and now you're still sitting in the same traffic, taking the same exits, wondering when work finally becomes optional. At the Armstrong Advisory Group, we help people create personalized retirement plans so they can better understand their income, investments, taxes, and Social Security strategy. Don't say one more year again without learning about these issues so you can make the most educated decision for yourself and your family. Let us review your portfolio and offer suggestions that may provide a clearer timeline for your retirement. Schedule your no-obligation meeting today by visiting us at ArmstrongAdvisory.com. That's ArmstrongAdvisory.com. The Armstrong Advisory Group. We answer only to you.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Mike, we got a Wall Street Journal exclusive here. Not exactly sure what's exclusive about it, but something is. U.S. workers are paying more for health care, and next year will be worse.
Yeah, this marks
This describes basically every year for my entire life.
And especially for the last 5. So for those that don't pay close attention to this because it comes right out of your paycheck and, some people kind of ignore that a little bit. The jump for 2026 for employer-sponsored health insurance, according to the National Insurance Services, was somewhere in the 6.5% to 8.5% range for 2026.
Yeah.
Our own health insurance plan here bumped about 8% last year, and U.S. employers are now expecting for 2027 that jump to be over 11%. And this is just kind of wild and out of control. A lot of it is still being pointed at for GLP-1 drugs, quite expensive and a very rapid adoption on behalf of insureds. More and more employer plans that I'm hearing about are, and Medicare plans, in fact, are barring these drugs for weight loss only. They are saying, hey, we will cover them, but it's got to be more than just for the purpose of weight loss, or otherwise we're not covering the cost of them. But nonetheless, prices continuing to shoot up on health insurance side and accelerating, which is, not only are the prices going up by big percentages, but those percentages are getting larger every year for the last 5 years.
And it's not surprising. It's entirely predictable that things move in this fashion. Because when it comes to the U.S. healthcare system, we've basically taken the worst features of both private and publicly run healthcare plans and said, hey, let's put those together. And so you just end up with this mess that just people don't feel like they're getting the care that they want at the price that they want. And I find it very rare for people to just generally have any kind of good experience with the broader healthcare system as a whole.
I'll just share a story yesterday of two people that I heard from who were service members, military service members that were on TRICARE, which a lot of listeners are probably familiar with, health insurance plan for a lot of military.
Yeah.
And the process of switching over on Medicare, ensuring that they had the right coverage, and navigating that entire process so that Medicare would acknowledge that there is TRICARE in place and they could switch over and their spouse could stay on health insurance, was such a dramatic mess that the two people in the room that didn't know each other prior to ended up talking for a good half an hour about like how this actually works. In one case, The woman whose spouse was a military service member found that her health insurance from, I think it was Blue Cross Blue Shield, covered more and was better than the TRICARE exposure. The average retiree has something like 35 different Medicare plans that they can choose from. Like,
good.
It's just a, pardon me, friggin' disaster. It just is so immensely complicated that, we've created this beast that I don't see how you fix without completely breaking it and starting over. But for the time being, it means that, whether you're on Medicare or whether you are on employee-provided health insurance or even getting it through the marketplace, all of those things have increased dramatically over the last few years and don't seem to be showing any sign of slowing down.
One day you're living in your own home. The next, you can't return home after rehab. Now you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major financial decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now at 866-848-5699 and get your free copy of Cushing & Dolan's guide called Last Minute Medicaid Eligibility. Once again, the number is 866-848-5699, or you can request the guide from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mike, as we head towards October, I want to talk about ghost jobs. Not actually related to Halloween. Thank you. You don't get it based on that booing. It was a little too high-pitched, in my opinion. I need a ghost with a little.
Ooh, that sounds more like a ghoul or I don't think I have it. I'm not going to get the job.
What's it? Well, it's not just you, Michael. Because here's the thing.
Lock him in.
When we talk about ghost jobs, we're not talking about people who are hired to be ghosts, but in fact, we're talking about postings that are on job boards that supposedly have no intention of actually being filled. Now, I struggle to understand this because I've never. Again, I've worked at two places in my adult life, so my experience is not that broad, admittedly. The first place was for 2 days, so I didn't really understand the hiring process there. But I've been in the same place for 17 years now, and I've never seen a ghost job posted by us. Every time there's been one, it's been, okay, we have a need and we need to hire, and here's the role that we're hiring for. So I struggle to understand the reasons laid out in this piece, even why companies would post jobs that they don't intend on hiring.
I think this does exist, and I don't think it's a full intent on not hiring, but I think it is a concept of we don't need a person, but if we find an impeccable candidate that, is just going to raise our organization to a higher level, then we would hire them. So we're just going to leave a job open permanently with that hopes of finding the needle in the haystack.
Okay. So
I think that exists.
So let's I will concede that it exists, even though I don't apply for jobs. I've been in the same place for 17 years. So I concede that it exists. Why is this a problem worthy of government intervention?
It is not. Because it makes people upset.
You know what makes me upset? Lots of stuff.
Yeah.
You know what I don't do? Say, the government needs to help me, because the government exists to solve the problems between people that are unsolvable on their own.
Right.
Things like, do you want to have a private army? No, probably not. You don't want Chuck's private army fighting Mike's private army, so you have the U.S. Army.
If there were only one employer in the country and they were posting jobs that they never intended to fill, I, again, would look at that and say, this might be not the most competitive situation. We should do something about it.
Correct. But
That's not what's happening.
Let's say that I am looking for a job. Actually, let's say I'm the woman that is cited in this piece who has applied to 3,000 jobs in the last year.
How do you even do that?
I get, well, I mean, 10 a day for a year gets you there. And I got to be honest, when I was applying to jobs out of college, I applied to, I think it was around 100 or so. I got like 2 interviews out of the whole thing.
Yeah.
And that was, over, a few months. And trust me, applying for jobs sucks. I get it. But she's applied to 3,000 jobs, so let's say that's 10 a day over the last year. In terms of, let's even say that 500 of those are ghost jobs, because the estimate that's in here from a company called Greenhouse is 19% of jobs advertised on digital job boards are ghost jobs. That still means that she applied to 2,500 real ones during that time. What's the cost to her? What's the net loss to her by virtue of those other applications she made? She took up some of her time.
Fractional.
But she still applied to all these other jobs and hasn't gotten those yet.
Yeah, and I'll also say the only way that you can crack down on this, even if you thought it was a good idea, which I don't, would be by penalizing employers.
Well, and how do you prove a job is a ghost job?
Right, and I don't think you can. So I think the only way to do it would be to put in a financial disincentive to post ghost jobs, which is a stupid idea. Hey, we are going to tax job postings at the rate of $30 a year. That would do it, because if you're an employer that doesn't actually want to hire you, you're not going to pay the fee to post a job. But what a terrible disincentive to hire people.
The plus side is that the DOL could finally have a Ghostbusters division.
Ooh. Now we're talking.
Which,
who are you going to call?
But yeah, let's be honest. This is not a problem worthy of government intervention. There are plenty of other ones where we can say, problem. This I just don't think rises to that level. Let's take a quick break. Hour 2 coming up in a bit.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years, when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years, when convenience starts to matter more, and eventually the no-go years, when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income
the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, Tucker here on the Financial Exchange, and as we kick things off, we've got equity markets rallying after, kind of just not really not really a great week.
A weak week.
If we're going to call it what it is. But today we got the S&P 500 up 0.5%, Dow's up 0.75%, NASDAQ Composite up about 0.5% as well. So all the major U.S. indices in the green today, which is always nice to see on a Friday. Like you want to end the week on a good note, even if the week didn't go particularly well for markets. U.S. 10-year Treasury up 3 basis points to 4.728%. So even with the news of the increased buyback programs that was announced on Wednesday, Treasury yields back above where they were at the close of Tuesday's trading. So you've got that dynamic at play. Even with interest rates rising today, dollar index down 0.01%. So basically flat, but the dollar's telling you I'm not coming back with that. That's not happening. And concurrently, gold, remember, rising rates tend to put pressure on gold. Gold's up another $74 an ounce today to $46.46. So gold continuing to chug along as even with interest rates moving up across the yield curve today. Crude oil down 20 cents a barrel to $86.63 on West Texas Intermediate. AAA national average for gas prices, though, up another 0.5 cent overnight to $4.11. And diesel up another 3 cents to $5.57. We are now just 24 cents away from all-time highs on diesel. And I was taking a look at diesel crack spreads today, which are now nosing above $103.75. So based on what we're seeing on cracks and on oil, diesel's probably getting into we're at $5.57 now. You're probably in the mid-560s sometime early next week. And we'll have to see where things go, but a real chance that we hit all-time highs on diesel in the next 2 to 3 weeks if the status quo is maintained in the Middle East and in Russia as well.
Chuck, my opinion, financial story of the week has been the Besant Treasury action in the bond market.
Yeah,
and what we've seen
financial
there.
Story of the second half of the year.
Agreed. Context-wise, every time that there's turmoil in interest rates in bond markets, every author out there starts talking about the deficit again and what's causing it. And I want to acknowledge for a moment that we crossed the $40 trillion threshold. So congratulations, all U.S. taxpayers. We now have $40 trillion worth of debt, and that doubled from, what was that? How long did it take to double? 10 years?
I don't know.
Something like that.
Fast.
Not long. So, there's this new, again, set of articles being printed about how the deficit's driving all of this. I'll just take a moment to throw out other theories that, could be driving interest rates higher. One would just be, expected stock market returns. If you think that, we're headed to an extraordinary market expansion and excitement about AI, then you might say, hey, I'm going to demand higher interest on risk-free assets that have nothing to do with that in order to not play in that space. It could have any number of different things to do with economic expansion, inflation expectations, devaluation of the dollar, some of which may or may not be related to the deficit. But every time this happens, everyone starts, rolling out the deficit hawks and the bond vigilantes who are going to, tear markets apart and dethrone the dollar. And
not dethrone the dollar. Remember, if the bond vigilantes have their way, higher bond yields are what maintain the dollar's value.
The dollar, yeah, true. Or it doesn't work and the dollar, is no longer the reserve currency. And I think all of these arguments
are dumb.
Yeah,
dumb.
I was trying to think of a nicer way to say it, but none of them really coordinate with each other. Nobody's ever been able to concisely explain to me what might happen if that were to take place. And so we're left with this place where, okay, let's assume that interest rates decline a month from now. I don't know if they will or won't, but if they did, what would you have to say about the deficit problem at that stage? Because that's exactly what happened last fall.
Yes, and the deficit didn't go down last fall.
No.
It continued to go up. I think the other piece, like when we talk about the decline of the dollar, and people always everyone loves to link to all these really crappily cited internet articles that don't know anything about what they're talking about. So don't do that. Don't be that person that spreads that stuff because no one likes that person. Here's the thing. The U.S. dollar's demise has been predicted for decades.
Better part of
decades.
50 years.
I still remember back when I was starting out in this business and admittedly was dumb. And, I would read some of these pieces and be like, oh, this sounds kind of spooky. And here's the way that I look at it, though. If you are someone who believes that the U.S. dollar is threatened, its reserve status is threatened, and we're going to use some other currency and blah, blah. There are a few things that I want you to think about. The first is, okay, if you really believe that, what currency do you want to hold your, any money that you have in? Anyone listening to our show,
Iraqi dinar.
Most of you probably have U.S. bank accounts. And my question would be, okay, so do you want to take the dollars in your bank account and, convert them into Chinese yuan? Do you want to convert them into euros? Do you want to convert them into euros? Do you want to convert them into yen? Do you want to convert them into reals? Do you want to convert them into pesos? If you're not personally willing to do that, then full stop. You're just worried about something in your head that you're not actually taking seriously because your actions are not matching up with what you're thinking about. But the second piece is, okay, if you're not willing to do that, why would a multi-billion-dollar company be willing to do that? Let's say that you are, I don't know, you're Delta Airlines as an example. Do you suddenly demand to be paid in yuan?
Or gold?
No, that's dumb. That makes absolutely no sense. You don't. And so, look, I'm not saying that the U.S. dollar is perfect. Ultimately, here's the secret. Any of these currencies that are out there, they're all bound for the same place in the long run, which is the toilet, and that's fine. You can there's no problem with that. What you have to understand is when people hear about the dollar's going to be replaced, what they immediately think of is I'm going to lose everything that I have, and that's just not how it fundamentally works. It's just not how it fundamentally works. In fact, the thing that you got to remember, a weaker dollar is actually, at least in the last 20 years, a really good thing for, local asset prices. Tends to be really good for the U.S. stock market in the short term. I'm not saying that this is good overall, and it tends to be good for other asset prices, hard assets and things like that. So I'm not saying that there's nothing wrong. Trust me, there's plenty wrong. the folks that get elected to the Senate this fall will be the first ones that have their term coincide with when Social Security is scheduled to run out of money. Which, by the way, if you want to talk about the budget deficit, Social Security is 22% of our spending year-to-date in fiscal year 2026. Medicare is 15%. Interest is 15%, which means those three items, I did the math so you don't have to, they're 52% of federal spending.
How much is defense? The other 48?
Defense is 13%. Yeah. And so, like, you're at 65% of federal spending from those four categories. Like, you're not fixing this with, like, the Department of Education. You're not fixing this with DOT. You're not fixing it with DOA. You're not fixing it with DOE. Like, if you want to fix the budget, you got to deal with Social Security, Medicare, and defense. No one wants to do that, so we're not going to do that, and that's fine. But ultimately, it can cause problems at some point. Is it what's causing like higher yields right now? I don't think so. Maybe it's an ancillary factor, but no one really knows if we're being honest. Like, Treasury moves on any particular day, especially, by the way, like, I think you got to remember, you get towards the end of the month, like next week, you get all kinds of mechanical things that happen. There's companies that have to make end-of-month payments either in dollars or taking dollars in order to move them into a different currency. Like, all kinds of weird stuff happens end of month. So my big thing is you got to be humble on this stuff. And when I say, like, that a lot of these things are, like, dumb, what I mean by that is that the certainty about them is dumb.
Yeah. Like I don't think
any of these things are inherently possible. But if there's one thing I've learned in 17 years in financial services, being certain about anything is dumb. Like, it's what it is. You got to be humble. Otherwise, the market will humble you. Like, it will absolutely rake you over the coals. I don't know why you would rake anything over coals, but someone must have at some point. So let's take a quick break. When we return, we have... I know we got a couple things. Let me make sure I get this right. We have trivia next, and then we're going to be talking about artificial intelligence.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
Stuck in traffic again? Same road, same commute, same thought. How many more years am I doing this? 1, 2, 5? At the Armstrong Advisory Group, our financial advisors help people answer one of the biggest retirement questions. Could I be retired right now? Many factors may affect your decision, including what your income might look like and whether your retirement plan is built for the life you actually want. We can provide you with some strategies to help you see where you stand. So before you assume you have to keep working, get a clearer picture. Visit our website at armstrongadvisory.com and schedule a no-obligation meeting. The Armstrong Advisory Group. We answer only to you.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now. 866-848-5699 and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
If you missed any of our shows from this week, you can go back and find them on our YouTube page. We stream the show live every day, but also archive every hour and all of our most newsworthy highlights and interviews from the show. All you have to do is go to YouTube, search for The Financial Exchange, and be sure to hit that subscribe button. Time for trivia here on The Financial Exchange, Friday Trivia. And on this day, back in 1959, Hawaii joined the Union to become the 50th state. The admission of Hawaii to the Union came just 8 months after Alaska became the 49th state. So our trivia question today, which state was the first to be officially admitted to the Union? Once again, which state was the first to be officially admitted to the Union? Be the fourth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia. I don't know if I gave the phone number there. It's 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Hey, did you say the number?
I said something, and then I just blacked out completely and forgot where I was. So I just want to get the number out there again.
I'm glad I'm not the only one who does that sometimes.
I literally just blacked out.
I had one yesterday where... So
I do that in the shower, too. I'll, shampoo, and then I'll forget if I shampooed or not, so then I re-shampoo just to be sure. That's what just happened to me.
I had one on Thursday morning where I had kind of a late night on Wednesday. And
Found
I always
himself driving the wrong side of the highway.
What's that?
I said woke up driving on the wrong side of the highway.
No, not that late of a night. But it was just like a short night's sleep. It wasn't ideal, and so every morning when I get up, I sit at the counter and I have a bowl of cereal and I'm reading through stuff on my phone about what's going on, and I'm sitting there and I'm like, where did I put my phone? And I spent 5 minutes looking for it
in your hand.
Not even in my. I was literally reading
at
it.
it.
I was literally reading it. I'm like, where is my phone?
Yeah.
So
one of those days.
Occasionally, the brain just doesn't wake up the same time the body does. Anthropic, according to a report from Bloomberg, expects to beat or match the size of SpaceX's record IPO. Okay, good luck with that.
It's a lot of money. So what's going on right now? Anthropic's touring the country, has their leadership out there. stoking the flames of interest in their IPO. This is what companies do before they go public, is they talk to investment managers and all sorts of organizations about interest in their shares. There's strict rules they have to follow on all of this, but they're trying to gauge how much interest there is in shares of this currently privately held company. The numbers that I had heard tossed out, I think only like 8 weeks ago, were about half of what they are talking about today, which is, if you're going to match or exceed SpaceX's IPO, $2 trillion valuation, $75 billion worth of shares hitting the market, the biggest ever IPO in history. That's a pretty high benchmark to clear.
It is, and the other piece is the revenue growth that they saw earlier this year is slowing down. So it's kind of like, okay, like what are you actually getting for this?
It's not unlike SpaceX.
Was SpaceX slowing down?
I thought so.
Or was it just like not that impressive? Like
generally.
Well, don't get me wrong. Like, look, they're growing at like 30% year over year, I think, which is it's fine. Like, it's not nothing. But when you're pricing things how they are, okay, like you gotta have some real meat behind that. And look, maybe with some of the acquisitions they've made, like Cursor, maybe they will. So again, let's see where things go. The piece that's buried in this that I despise, and again, I don't use that word lightly. I'll quote here. Anthropic is considering adopting a so-called super voting shares that would give Chief Executive Officer Dario Amodei, who owns about a 2% stake, and his fellow co-founders greater control over the company, a person familiar with the matter said. This is the same kind of stuff that Zuck does. It's the same kind of stuff that Elon... This is the stuff that really bothers me from a corporate governance perspective.
Yeah.
Because it basically means that if they end up going that route, okay, he doesn't own more than 2% of the company, but he and a couple other key partners can basically never be ousted because they have controlling stakes of voting shares, and that really bothers me from a corporate governance perspective. And I can't stand when companies do this because, hey, look, if you really believe that you're the guy,
then don't sell your shares to the public.
Well, not even that. Then put your money where your mouth is and do such a good job that the board will never fire you.
Yeah.
Or, hey, do what Steve Jobs did. Great, the board fired me. Okay, I'll go start another company, and when you guys come crawling back to me in 5 years for me to save you, then I'll save you. But if you're not the guy, then we got to know that you're not the guy and be able to get rid of you. So the super voting stuff really bothers me. More than any talk about the valuation or whatever. Look, there's plenty of hype here. I understand why these kinds of valuations are being talked about. Are they legitimate in terms of, are these companies going to be worth it? I got no idea what it's going to look like 5 years from now. I have no idea if $2 trillion is, crazy high or crazy low, which is why these companies are investing as much as they are, because the upside, if this works the way they hope, is insane. But the stuff that bothers me is look, if you really think you're the guy to run the company, then you don't need the super voting shares so that you can never be voted out, man.
Mm-hmm. Yep.
Either actually believe in yourself or don't. Don't do this where you're I'm the only one who can lead us, which is why you can never vote me out. Well, no, then you're actually not the only one who can lead us. You've just given us no other option.
Yeah, I do not like it either. Plenty of companies do it. They would be in very good company, but it does leave a little bit of... Well, it leaves you as a shareholder with very little control over the direction of the company's future.
So we head towards the bottom of the hour. Stocks remain positive. S&P's up 35 points. Dow's up 393. NASDAQ Composite's up 100. 10-year Treasury still up 3.8 basis points to 4.736%. And gold still catching a bid, up another $82 an ounce to $46.53. We're going to take a quick break. When we return, we've got the trivia answer and Wall Street Watch next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last-Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last-Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled Navigating Retirement Housing Choices. Mike, when we look at the considerations for people in their housing and retirement, one that comes up are these continuing care retirement communities, CCRCs, or age-in-place communities as they're known. How does someone make a decision about looking at one of those?
Well, I think obviously you have to sort out your priorities, but the first thing is to think long-term about this. And what people sometimes overlook with these places is that term continuing care means that they adapt to your needs over time, but they do not just allow anyone in. In a lot of cases, they will have cognitive and physical tests that you need to pass in order to be accepted into these communities that then will provide all sorts of care later in life. And so I think early on is always better if you're considering that sort of thing.
The financial aspect of these also has a number of considerations as well in terms of what's actually affordable given your particular budget and liquidity.
Do I need a buy-in? Am I going to rent a place? What are my options for later in life? And then all sorts of tax considerations. Hey, I really want an income tax-free state. Well, is that worth it if I'm going to be paying more in property taxes given the composition of my assets and income? All of these really important considerations.
The guide this month is titled Navigating Retirement Housing Choices, and you've got a couple different ways to request it. First, you can call 800-393-4001. The second choice, you can go to armstrongadvisory.com and request it there. Again, that website is armstrongadvisory.com, or you can get it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are trading in positive territory to put a bow on a pretty chaotic week as Wall Street continues to assess the bond buyback made by the Treasury this week. Right now, the Dow is up 0.75% or 400 points higher. S&P 500 up over 0.5% or 40 points higher. NASDAQ is up 0.5% as well or 130 points higher. Russell 2000 up 0.5%. 10-year Treasury yield is up 3 basis points at 4.73%. And oil is dipping, trading right around $86 a barrel. Bitcoin heading for its best week in more than 3 years and now trading at $77,000. Crypto stocks, including Strategy, Coinbase, and Robinhood, are all seeing substantial gains in reaction to that gain. Meanwhile, shares in Ross stores are climbing over 4% after the off-price retailer hiked its full-year outlook on higher demand from new and existing customers. Sticking with retail, where BJ's Wholesale Club is up by 3% after the company posted better than expected quarterly results, where its revenue jumped 16% as budget-conscious shoppers were in search of value. BJ's also increased its full-year adjusted earnings forecast, and according to Bloomberg, Broadcom is in talks with lenders to raise more than $60 billion in debt from an AI chip financing deal that will benefit Anthropic and other companies. Broadcom is up over 1%. I'm Tucker Silva, and that is Wall Street Watch. In the previous segment, we asked you the trivia question: which state was the first to be officially admitted to the Union? That would, of course, be Delaware.
I'm in Delaware.
Yes, and Roberto from Tulsa, Oklahoma is our winner today. Roberto's listening on Sirius XM, taking home a Financial Exchange Show t-shirt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Which state do you think has the most unusual or the most unexpected admission date?
What?
What state?
No, I heard you.
Has the most unusual admission date to the Union? It's not Massachusetts. Massachusetts was, I think, 6th.
Yeah.
New York?
New York was in the top 10. Maybe it was like top 11 or 12. So it was in there.
Pennsylvania?
I don't know, Chuck. What do you got?
The one that, again, like you got to think about it. The one that always gets me is Maine, which people don't realize. That, like a lot of people outside of Maine and New England don't realize that Maine was part of Massachusetts for most of its time. There's actually like some, long-running, resentment on both sides, I think, about Maine. But Maine didn't become its own state until 1820. It was part of Massachusetts until then, and then immediately became a state that was admitted to the Union shortly after it became its own state. But that one always gets me because, like, you look at the states that surround it in terms of, the order of admission, and it's surrounded by Illinois, Alabama, Missouri, and Arkansas, which makes sense. It's like, oh, yeah, we're going, like, south and west. And then Maine's just right in there, and you're like, wait a minute. What gives? And it's because Maine used to be part of Massachusetts until 1820. So there's that. Happy 226th birthday, Maine, or 206th birthday. It's great. Piece in the Wall Street Journal. When your bumper 401k is a tax problem waiting to happen.
If you have a bumper 401k, it's a pretty good problem to have.
There's an old quote that I like to use. I don't know who had it originally, but everyone's got money problems. Warren Buffett's got money problems. Guy who is, completely broke has money problems. You want Warren Buffett's money problems.
Yeah. Yeah, if I had to take my pick, that's where I would go. So what they're actually referring to here is a phenomenon that you may or may not be familiar with, but that at 75 these days for anybody that's born, after 1960, I believe it is going to have a required distribution from their 401k, IRA, any of those tax-deferred retirement accounts. And what they're referring to here is that the tax problem that could happen is those forced distributions, or even if they're not forced, just voluntary distributions that you might want to take, right? hey, we're buying a new house this year and we are hoping to, buy it and then sell our existing home rather than try and do that fun maneuver where you sell it, buy it at the same time, have some sort of lease back and all that mess. Well, how are you going to do it if all of your money is in a 401k or an IRA? It's pretty darn difficult to do. And so that's the tax problem that a lot of folks face is I've done an excellent job saving for retirement, but it's all in this pre-tax bucket. And so not only do I have a future RMD required minimum distribution tax scenario that's developing, but if I have any, plans that diverge from the expected state of things and I need more money in 1 year, then I'm going to burden myself from a tax perspective. So, I hesitate to tell people, though, Chuck, that they shouldn't be saving as much as humanly possible into their 401ks because for the vast majority of people, they're not going to get to the point where it's too much.
I think the question that gets asked an awful lot and the one that is worth considering now that they're basically not standard, but they're in just about every 401k in America is traditional 401k versus Roth.
Yeah.
That's the one worth asking. And most of the time, again, we come back to the idea of being humble. Do any of us actually know, like if you are young and listening to this, and I'll define young is under 45, okay, because it makes me still qualify as young.
Yay.
Right? Thank you. If you're young and listening to this, do you know what tax rates are going to look like when you retire?
I sure don't.
No. The conventional answer is, okay, if your tax rate now is going to be lower than when you retire, you do the Roth. If your tax rate now is higher than when you retire, you do the traditional. So I think if you don't know where tax rates are going to be, because none of us do, then the obvious answer is, okay, you can hedge your bets and send part of your retirement contribution to the traditional and part to the Roth. That can skew based on like your personal thoughts on where that difference in tax rates may be. So maybe you say, okay, I'll do 50% into the Roth, 50 into the traditional. Maybe you're 75-25 one way, but that's a way that you can approach this as well to manage different tax qualifications for different buckets of money as you get older.
Yeah. Here in New England, there's another added factor there of so many people in this area live in one state and work in another, or work for a company that's in another. Yep. And so I know plenty of folks who live in southern New Hampshire, for example, but get taxed in Massachusetts because that's where they derive their work income. Okay, that adds to the factor of what tax rate am I going to be in when I retire, because I might be able to avoid Massachusetts income taxes by funding a traditional 401k and then avoid it on the way out by not living in Massachusetts. A little tougher if you live in Oklahoma City, for example, where you're hours from another city where you might work, but entirely possible when you are talking about Rhode Island, Connecticut, New York City. These are all very different types of places where your tax rates can vary a lot depending on where you work and live. If you are in that planning stage of still funding that retirement account and trying to figure out what the right funding mechanism is, give the folks at Armstrong a call. I know that's not what you think about when you think about, hey, investment management and retirement planning, but it plays a crucial role, and far too many of us are just on the autopilot. Hey, I started this job 10 years ago and they selected the funds for me, and it's just been a slow increase over time. If your life has changed as much as mine has over the last decade, then you need to take a more critical look at this than just putting it on autopilot. The number is 800-393-4001. We offer free consultations all across New England via Zoom, in person, pretty much every state across the country we can meet with folks. If you'd like to learn more, ArmstrongAdvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's take a quick break here. When we return, we're joined by Paul LaMonica from Barron's next.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
The worst time to make a housing decision is when you don't have a choice. This is Chuck Zodda from the Armstrong Advisory Group. Too often, people don't think about their next home until a health issue or the upkeep of a house makes the decision for them. If you start planning now, you can take your time, explore your options, and make decisions that fit your retirement goals instead of reacting to a crisis. In our new guide called Navigating Retirement Housing Choices, you'll learn about downsizing, 55-plus communities, continuing care retirement communities, assisted living, and the important questions to ask before making one of retirement's biggest decisions. Don't wait until circumstances dictate what you need to do. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
As promised, we're now joined by the one, the only Paula Monica from Barron's. There might be other Paula Monicas in the world, but not from Barron's. There are not. Paul, how are you doing today?
I'm good, thanks. How are you?
Doing well. So we've seen in recent weeks a flurry of U.S. IPOs that people have been excited about, most notably SpaceX. You've got other ones coming down the road. But also, China has seen a number of IPOs that have gone gangbusters with, some of these up 500-600% on their first day, kind of reminiscent of what it used to be like back in the dot-com bubble where you could, quadruple your money in the first day of trading on IPOs. And I'm curious what's driving the excitement about these Chinese companies here.
Yeah, it's great. Two in particular of interest: Unitree Robotics, humanoid robotics, so competes with Tesla in that regard. That was up over 460% on its first day, and CXMT, a AI chip company, also surging, nearly 500% last month when it debuted. I think you're right in some respects that the one notable comparison to the late 90s is that a lot of those companies in China are pricing their shares at a very low conservative price to attract retail investors, and that is reminiscent of what happened in the late 90s with some companies that no longer exist. The big difference, though, is that the listing standards in China and on Shanghai's star market, where these companies are trading, are much more stringent, and it takes a longer time for companies to get through all the regulatory hurdles and hoops and pass muster before they can begin trading. So people, I've quoted in the story, talk about how the companies will price the offerings conservatively to try and get approval, and that does lead to these big pops. But these are not fly-by-night companies like the dot-coms of yesteryear.
Paul, when you look at the overall performance of Chinese equity markets in the last 5-10 years, I'm just looking at the MSCI China total return index, or index total return. Chinese markets effectively flat over the last 5 years, whereas the S&P 500 has almost doubled. What is getting investors so excited about these, given the overall lackluster performance that we've seen in Chinese markets for the last 5 years?
Yeah, it's a fantastic question. I think the excitement is largely surrounding the expectation that Beijing wants to be a leader in industries like chips, in industries like robotics. So these are companies that are designed or are going to be set up to do well by, the state-run economy that essentially is China. But you have to keep in mind, and I think this is one of the reasons why Chinese stocks maybe have lagged the U.S. Over the past couple of years. There are always going to be concerns about when the Chinese government decides to change its mind and be more strict and enforce regulations. And, the days of where's Jack Ma? Remember when we were all wondering where the founder of Alibaba, one of the most prominent companies and has a U.S. stock listing, where was he? I mean, that's something that you're never going to have in the U.S. For all of the craziness that can happen in Washington sometimes, particularly in the past couple of years. I don't think you're ever going to have an environment where people are going to say, where's Tim Cook? Where's Jensen Huang? Where's David Solomon at Goldman Sachs? I mean, CEOs are pretty prominent in the United States. Where's Elon Musk? Where is it, Elon Musk? That's not going to happen to the same extent in the U.S. That's always going to be, I think, a risk for investors looking at Chinese stocks. And it's also important with these companies that I'm talking about, you can't even probably get in easily as a U.S. investor. These are companies that are designed really for the domestic trader in China. There are ETFs that own them, so that's the best way if you're interested in these companies.
You outlined one of the risks, which is, okay, maybe the business becomes, less favored by the Chinese government. But another one is, hey, what if the Chinese government incentivizes them to overproduce, driving profits down? Because that's something that we see in quite a few of these industries. The most recent one being, look what we're seeing with a lot of these Chinese EV makers where they've produced too many vehicles. And yes, they're trying to sell them cheaply overseas now. But part of that is because they can't sell them all domestically.
Yeah, it's a great question. I think that there are always going to be concerns about what Chinese companies are doing not just for their own economic benefit, but what it means for the economies of the U.S. and competition and what that means politically. So, you look at things like DeepSeek and some of these chip companies as well, they may look to undercut the likes of NVIDIA and Broadcom and other major American chip giants because that's a smart political thing to do. But that isn't necessarily going to be great for the stock prices of some of these Chinese companies that are going public if they have to, take a margin hit for the greater political gains that Beijing is trying to accomplish.
Very good. Paul, appreciate you joining us today, and I hope you have a fantastic weekend.
Thanks a lot. Same to you guys.
That is Paul LaMonica with Barron's talking about some of the recent Chinese IPOs. Mike, what do you got for me that we haven't covered yet?
Chuck, your talk of the Chinese automobile industry reminded me of another overbuilt boom-bust bubble industry in China, which was their real estate market. The founder of China's Evergrande Group. Remember Evergrande?
Evergrande.
Yeah, the liquidated property developer. He was sentenced to life in prison on Thursday by a Chinese court. He pled guilty to several charges, including fraud, corporate bribery, and illegally taking public deposits, all of which would probably be true. But really what happened here is he pushed for expansion.
Look bad.
Yeah, he made the Chinese government look bad by doing exactly what they wanted him to do, which was expand real estate at a very dramatic rate. And then when it all went bad, they needed a scapegoat, would be my read on this. So his former companies were fined a total of $2.3 billion. He lost everything. He's going to spend the rest of his life in a Chinese prison. But, reality here is you do wrong by the Chinese government. See you later. You'll never be heard from again.
Yeah, it's again, I'm not entirely surprised by this story, unfortunately. Taking a look at markets as we head towards the top of the hour. Equity markets stretching their legs topside right now. Dow's up almost 1%, 473 points. The S&P up 52 points, about 0.2%, and the NASDAQ Composite up 186 right now, up about 0.75% there. So equities in the green, bonds still selling off a little bit, dollar is flat. Hope you all have a great weekend, and we'll see you back here on Monday on the Financial Exchange.